The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Good morning. Hope you guys are doing well and had a good weekend. It's nighttime here in Asia. A lot of things happened today. A lot of good setups already in force here on the currencies. We're going to start out with the currencies. Let's take a look at the British pound. This is got a little bit of a DMZ, as we've talked about, between 130.19 and 130.82 as a little bit of a floor on the British pound. Just a little bit of a review here first. Definitely, fundamental news, technical news combined had that kind of piercing of the 130.19 area. And last week we talked about, I'd rather see a close above that general area, those weekly unfair lows above that 130.19 to get started looking at this from the long side at all. Wasn't a huge fan of being shorted, but again, we have to wait and be patient, wait for confirmations to happen. And I want to blow this up a little bit because you've got a similar situation on the yen I want to talk about. And again, remember, this is our long-term view. These are the major inflection points to pay attention to. We're not clear. We weren't exactly that clear last week until we, had that weekly close, in my opinion. But, we had that close above. We come back and retest, reached a low today of 130.35. So that's very close to that 130.19. And then we've rallied off of that. So that weekly close, again, all important. Let somebody else fight it out and figure out where the ultimate lows and ultimate highs are. But when we had that weekly close, then we can look at this inflection point on the weekly as something to lean against to play defense. We talk about that till, the cows come home. But again, such a major facet in trading is knowing where to play defense and where to say uncle. You're trying to put the probabilities in your favor every day. It is what it is. You're going to be wrong sometimes. But again, waiting for these really cool setups to happen and being able to leverage them is pretty daggone cool. So that's happened today. And we've rallied, about, 80, 90 pips. Let me see how high we've been. About 100 pips, actually, from the lows there. And I like the indication that the British pound is having right now. And looking at our daily, we're also crossing some borders again on the daily side. I'd much rather look at this from the long side and being able to orient stops on some of those inflection points, or below those inflection points based on your appetite for risk. Let's hit the yen really quick. And again, I'm a big fan of actually not shorting the yen. Let me see if we can get the weekly charts to pop up here. Here we go. We closed last week pretty much right on this little puppy down here. We reached let's see, where did we close at? 121. That unfair low is at 124. So really, in the noise area, to say the least. But kind of using that to some degree to look at possibly a bounce area. We talked about the yen just kind of piercing that area just to get some people out. And we may come down and eclipse these recent lows, which were at around late June, third week in June, fourth week in June, we reached those lows of 99, about 99 even. Again, we can always go lower, but I like how we've come down into these weekly unfair lows. We're due some decent news from the BOJ. Hopefully they'll starting the printers again. And I like this area to play defense just like the British pound. Let me see if I can get my charts to work here. So, again, I like the long-term play there on the long side. Similarly, we've been taking a long stance on the Aussie dollar, and we talked about taking some of the weight off around 77.46, and then we have to just kind of wait. We have to wait and see where the weekly closes are. But I like this trade a lot now because we've been patient and drilling down into the dailies, even though we've kind of reached those long-term targets for a while. Now you've got blocking out one side of the marketplace. For me, the short side, we've come all the way back down into these unfair lows on the daily, 75.87, and we're starting to, again, move up off of those lows. So trying to find support and trying to find breakouts, blocking out one side of the marketplace. Lows today, 75.84, and those unfair lows are 75.87. Okay, so again, within 3 pips there of the daily unfair lows, and I'm expecting this to rally from here. But again, we wait patiently until the market comes to us, and then we have a chance to play defense around the inflection points. The theme for today. I don't know if you guys can hear it raining outside, but rains about 50% of the time in this country. Taking a look at the euro, not much to really talk about here. I'm still a big fan. I know. Not much to, somebody said it sounded like frying bacon. It sure does. Not much to talk about here. I mean, I'm still kind of a fan of keeping the hedge on and trying to let this thing fall apart. The dollar has not helped this type of trade. But again, this is more of a long-term thing, and I'm not really paying attention to it. In my opinion, you got a chance to double up around 114.65. But again, kind of in no man's land on this one. And I'm just sitting tight, the hedge is on, and not trying to day trade the euro right now. Canadian dollar, let's hit this one. Considering what crude's done lately, crude, what have you done for me lately? God, it rallied like crazy last week, huh? So here's the long term on the Canadian dollar, right smack dab in the middle of the fair auction here. And on the daily, and again, this is Canadian dollar, with crude, just blowing a gasket on the upside there. Canadian dollar obviously got valued more, but not exactly. Let me just go back to the long term here. I'm flipping around too much, and I'm trying to get slower in the dissertation here. So if you look at the Canadian dollar and back up just a little bit and kind of relate it to crude, we've made higher lows here. On the long term, excuse me. But as you look at this, I actually like this from the long side. Crude getting back down below those weekly unfair highs around 47.34, I think it was. We're going to look at that in a little bit. I think this particular instrument can at least get back up into 129.92. All right. It's hard to trade this right now, though, because, the weekly and the daily, we don't have a lot we can lean on. And I think I hear the music. So we got to take a break. We'll be right back, folks.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. So what we're doing right now, we're showing the S&P 500 futures, and we're showing 2177.50 is the last print here. This is real time. God, please don't tell the exchange we're talking about real time prices without them getting a cut. God, no, we don't want to do that. You know, that's another thing. I mean, I'm sure Larry's got some comments about that if he's listening. You know, a lot of these exchanges have ramped up the... I can't think of a better way to get people to stop trading products than to raise exchange fees. What a bunch of lunatics. Larry's not listening because he does not have his hearing aids in. Okay, sorry, Larry, forgot about that. What do you think about that, Larry? I wish you'd call in so we could go down a dark path of slamming the exchange and why they would raise exchange fees, huh? Crazy, just crazy people. God, man. They should use the freemium model. How about that? Isn't that the way to go these days? Yeah, so 2177.50 real-time price here, as far as they know. And got a hint of a new profile attempting to appear here. So I think the more important thing is what we talked about last week. Let me see if I can get my chart to stay up here. What we talked about last week was, you know, you try to always figure out where's the edge. And Larry seems to be listening, and I know he'll agree with this, that, you know, a lot of people in Chicago have made a really good living by trying to figure out how to increase the odds a couple of points. And then it's really all about, you know, your position sizing and what you're going to do for risk-reward ratios and things like that. And we talked last week about, you know, where's the edge? Oh, wow. Larry is Larry on the line with us?
I am on the line as you requested.
My goodness. Folks, we're honored. Larry Pesavento is trading with us this morning early.
Wait a minute. I can hear the sound of one hand clapping. Hey, listen, you asked a question about the fees at the exchange. There's a big word for that. If anybody's ever played Parker Brothers game Monopoly, they got you by the short hairs, folks. There's nothing else you can do about it. They'll keep raising them till they can't raise them anymore. That's basically the bottom line.
Well, Larry, first of all, thanks for calling in. But in the face of every ETF in the world out there trying to mimic all kinds of things, like why in the world would they almost force people to say, you know what, maybe I don't need to pay these exchange fees and I'll just trade the similar ETF? I mean, what are they thinking? I don't understand it.
Well, there's another part of that sword, John, and that is that the commission rates are down. From 25 years ago, they're down probably 95%.
Yeah.
It used to be if you got a $40 discount rate, you were feeling fabulous, and now anybody can get a $4 rate on a future for in and out. I mean, that's like the old $2 brokers back when I was on the floor. Even though I was the floor trader, I still had to pay $2 on each side. So everybody has the same chance to being a floor broker now. But the problem is they do charge for the data. The problem is the data is so bad in some of the places that it's it's really they shouldn't be charging that much for it. That's some of these.
I know.
Yeah, you see, Commodity Quote Graphics gives you pretty much perfect data, as does Genesis Capital. But when you see some of the quotes on some of these other places, they don't handle the bad ticks well, and that makes it a little bit. You have to make adjustments for that.
So are you saying that since the exchanges are raising prices, that they're going to give a broker part of that cut because the brokers are doing so bad?
No. I'm just saying they're not going to give the brokers anything. No, they.
I'm just joking.
Oh, okay. Well, I'm not the sharpest knife in the drawer, So I got to go slow with me, But anyway, they'll it's basically much cheaper. That's all I can say. Even though the rates, are high, they're a lot better than they were when you consider the commissions that are involved.
Yeah. It seems like it's weird how the brokers are making next to. I don't even know how they do the transaction for the risk. I mean, that's just you just got to weigh that out. But then the exchange is actually taking more of their share. It's kind of wild,
The job that I'm looking for is the job that the guy at Viacom had, where he got a $72 million parachute for doing a bad job over 4 years. There's a really lesson to be learned here, Mr. Logan. Do you know what that lesson is?
I'm sure you're going to tell me.
I'm going to tell you. You want to find out who that bozo was that wrote the contract, because he's the one that should get the bonus. I mean, oh my gosh. I mean, to have a golden parachute like that and then people accept it, God, I don't know. We'll see what happens. It goes on to what Basil's been saying about the absurdities in some of these markets. This happens to be one of them, I think.
That is insane. I mean, the only people voting on that contract are who? The board members? Most of the time?
The board members have to approve it, and it's done by Headhunter and his attorneys, and they want him bad enough he can put about anything that they want. If you remember Mrs. Yahoo, I can't remember her name, that runs Yahoo, she had one of her buddies come on who was only there 6 weeks, and he got a $14 million golden parachute.
Oh, my God.
That was 5 years ago, 4 or 5 years ago, when she first took over. She took over one of her marketing buddies from the company that she came from, and it didn't work out. And so he had a $14 million golden parachute, which worked out to like $160 million a year, something like that.
Man, that's just
not as profitable as politics, but almost.
That's shameful. That's crazy.
Yeah, no, it really is. It really is.
For his pain and suffering.
For sure. Well, listen, I will let you go. Give the folks the information. They don't want to hear my lips flapping, so I'll talk to you later, John. Keep doing the good work, buddy. We appreciate it.
Thanks, Larry, and thanks so much for calling in. Okay, bye. Always a pleasure. Always a pleasure. I listen to Larry's show every single day. Okay, so talking about the S&Ps, this is, I'm sure Larry would agree with this. A lot of people made a lot of money by trying to find a way in Chicago to try to increase that edge just a couple of points, and then the math really could start working in your favor. depending on position sizing and, risk reward ratios and things like that. And that's one of the interesting things I talk about briefly sometimes, is when you start exploring, automated systems and strategies, you really get a chance to kind of play around with, what's going to work for a certain strategy as far as winning percentage relative to risk reward, playing around with those things, playing around with the stops, playing around obviously with the risk reward. That's what that is. And then trying to find a system, and it's hard to do this in commodities, but if you can ever find one that works across all commodities, then we need to talk. But having a similar strategy that you can use across quite a few instruments without having to kind of curve fit the little baby to that specific instrument, you got a real gold mine there. And we're going to talk about that a little bit more when we come back, and then talk about the S&P spine. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show, and it was just completely awesome to have Larry on a while ago. I want to post this in the den. This is a very, and I hope Steve Banger will call in. Let me see if I can get this in the den here. This is this is an article in a highly respected German newspaper or magazine. And I think Steve's going to call in tomorrow. But Steve and I were talking about this earlier, and you can run it through Google Translate. And Larry has a webinar this week. Is that true? I hope so. Is that true, JB, in the den? I hope so. This article is in German, and if you run it through Google Translate, I'm going to go ahead and spoil the whole thing for you, but you should read the whole article, because what it talks about is how the Swiss Central Bank and the Japan Central Bank invest in stocks. Now the Swiss Central Bank now owns more shares of Apple, Google, and Facebook than CalPERS or Janus combined. And I think you guys, this is ludicrous. I mean, that's shocking. A central bank. So I really think you ought to read that article. Steve kind of pointed it out to me, and I've kind of run it through Google Translate a little bit and started reading it. But if you guys want to read something, shocking is the word that comes to mind here. Take a look at it. It's in the den. Might be an interesting read for you. So we were talking about the S&Ps, and we were talking about edge and do you trade off of these inflection points sometimes from the short side, or do you just pass on those? We talked about the Aussie dollar meeting some targets, 77.60 something, and then we were like, okay, well, we got to just kind of wait and see, because I'm not that big of a fan of trading the Aussie dollar from the short side. So let's try to find areas of support or trade breakouts, and let's also pay attention to those weekly closes. But the S&Ps, I'm not such a fan of trying to short against 2183.50, 2182.50, some of those numbers we've talked about on multiple time frames, because I don't see a lot of edge in it. And I almost look at it more, and even though we've got a new profile attempting to appear on the weekly, that's pretty evident by that yellow peel back in the scanner, or that bar that you're seeing there. And if it's not in the scanner already, it'll appear pretty quickly. I have to kind of take a look at the scanner, and I have to look at the breadth situation. And the reason I do that is because if we're at the market tops and we're kind of like putting around up here, there are certain times when we start seeing some cracks in the armor and on the underlyings, and I just don't see it right now. So when we look at this, I'm more apt to pass on some of these shorts around these unfair highs on the weekly, or on the daily. And if I do play around with it, I know that and here's that 2082.50 on this 240 here. I know that it's just kind of a contra trade against the long-term situation really at hand. And, we talked about this a lot too. I just want to reiterate this. Joey and I were speaking one morning, and it's so true. I mean, sometimes, we were not joking at all. It's just leaving a couple of shares or a contract or two on in that same direction that you're supposed to still be trading, just to remind you to not cross yourself up, start shorting something, breaks through the highs, or comes down to support, whatever, and then you're all mixed up mentally, technically, what side of the market mixed up, the whole 9 yards. So, bottom line is I'm just a little bit more partial to just not shorting this right now, and I want to see some bigger evidence, and I just don't have that right now. So I said that about 15 ways to Sunday, so let's talk about something else. Crude had the weekly close above this area right here that we talked about trying to maybe get a little leverage against last week, 47.53 it is. This is our weekly unfair highs on the September contract. Let me go check something here really quick. Okay. So 47.53 weekly unfair highs. Here's the daily situation. So, what do you do with crude now? Do you say, hey, wow, we are pulling back this morning into those weekly and fair highs. I think crude's had a big run. We could either consolidate up here to move higher. That would be concerning for a lot of shorts if we started spinning around up here at or above 47.53. I think crude's kind of a no trade right now. You don't see any new profiles attempting to appear on the daily. You're just coming down into this area with a little bit of noise and a very wide profile on crude. Not super wide, but wider than normal. And unexpected move up might have caught some people on the wrong side of the trade, and it may not be over. I mean, we may actually pierce last week's highs just to do it and kind of force some more stops to be hit. So I think crude's kind of a no trade right now, guys. It's a little bit scary to short, and we've gone a long ways in a short amount of time on the long side. So here's the 10-year. I mean, again, it's turn the wrench the same way type of situation on the 10-year, playing around that 130, 132 general area. Beans, going to hit these really quick. All right, so got a new profile here this week, but again, we talked about this 10-15, 10-16 area. What's the unfair lows here? 10-15, let's call it 10-16 rounded off, and we reached a high last week at 10-17 rounded off, and we backed off a little bit here. So if you're looking to trade beans, my true opinion is we've kind of broken below in the long term about a month and a half ago. We've rallied back up into that breakdown area, almost to the tick. We're backing off. We got a profile that's edged a little lower. The big inflection point now down below is 964.5, 965 on the November contract. And, got a nice new profile here, a little bit of extra supply up here. And first stop down will be 973.5. So those are the two big numbers on the downside. I think you got a chance to look at this from the short side for a little bit here, play defense above that 10-17 area. And, the risk reward this morning was pretty good. It's getting a little bit weaker right now, but I think it's still something you can play around with on the short side. Dollar. I'm not a huge fan of being short the dollar, and look what we did last week. We came down and bounced right off that big area, 93, 94. That's another good piece of evidence. Let the market come to you. Lows were 94, even about 6 ticks off. So we'll be right back, guys.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology.
Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show. So the dollar, we're finishing up with that. Was that break long? Seemed like it was a long break. 93.94, 93.95 rounded off. So again, what do you do with the dollar? I think you got to just, the way I'm looking at it is new profile hadn't been down here on the daily. We kind of bounced off the weeklies. 95.20 is what I'm looking at here. But if you're just kind of waking up and wanting to get into this trade, risk reward's about 1-to-1 here, and not a great amount of edge. So might want to just pass on it right now and just wait for the market to come to one of those inflection points to try to be able to play defense there. All righty. Speaking of Germany, Achtung. Here we go. All right, so here's the DAX. I think this thing really does deserve to come back and kind of hit this 10,200. I'm not a huge fan of being able to day trade the DAX, but if you can trade it kind of lightly, I think we could come back and meet some lower inflection points here. Let's see here. Somebody in the den's asking what Steve's take is bullish or bearish on equities. I don't think there was a a balance, an imbalance either way on that RJP. It was just almost the idea that, man, this is going to end ugly. When it ends, it's going to be just so many people trying to get out the door at the same time. That's the scary thing. And then it's just going to be an incredible whoosh sound. But, again, the game is, I think I've been listening to Trump too much, but that game's a little rigged right now. So, again, we can't fight it. When it starts happening and coming unbuckled, that's when you just have to wait for somebody, let somebody else get the high print on it. It may continue for a while, though. Let's take a look at the December contract in gold. Duffy, I couldn't have said it better. I've lost a lot of money trying to make sense of things, and maybe Larry can comment on that one too on his show. It's you can't try to outthink these things. What's the guy always say about the treasuries? Jimmy Rogers, man, that guy was short treasuries for like a decade, trying to make sense of it. Yeah, as traders, you got to kind of throw that stuff out the window and just it is what it is. This is where the buyers and sellers have determined the price. All right, gold. I am a huge fan of not being short this product, and I have gotten beat up a little bit around this 1347.48. So I'm just trying to stay in there and keep turning the wrench the same way. At some point, I do feel like we're going to race up towards 1366 and a lot higher. Not wanting to short against 1366, but you know, that's just the way I'm looking. I'm blocking out the short side on gold. So sometimes you got to just keep taking little nicks, even though you feel like you're on the right side of the market there. Doesn't always have to, the guy didn't have to always get the cheerleader at the end of the movie. So sometimes you just got to take it, take the medicine and keep moving forward. The XLF, let's take a look at this one really quick. All right, so let me back up a little bit here. XLF on a grand scale, on a longer term scene here. I'm still not a huge fan of looking at this particular sector from the long side, even though we're above weekly unfair highs. You know, there's some opportunities in the XLF, in the scanner from the short side, and I'm just trying to stay focused on those. The market could move higher here, the S&Ps. That's the only thing that's concerning, kind of rising tides lifts all boats. But, you know, we always talk about relative strength and relative weak or relative weakness type plays. And, you know, if you're going to listen to me sometimes about my ideas from a broad sense, a lot of times it's way, way easier to drill down into those sectors or find some stocks that are just kind of anomalies that are going on that are kind of raising their hand and showing themselves early. And that's kind of the way. I'm not looking to short the XLF in general, but just try to find some financial sector stocks. All right. Okay. We're going to hit a couple of bellwethers here. Apple. Again, you know, talked about this one being a pretty good candidate from the long side, considering that breakout that happened, that one right there on the weekly. This is the daily I'm looking at, and this, you know, profile appearing below price action, very scary for short. So it's not showing the cracks in the armor yet. If you want to kind of jump on this and beat it on the short side here, it's just not it's not in the cards right now. I got to hit this one, the Amazon. Now, we always talk about waiting patiently and wait until the market comes to you. You've had Amazon come to you now, and you've got another trading opportunity. And you got a strong stock, market moves higher. Guess what's more than likely going to happen with this little thing? So put your stops in. This one looks relatively attractive from the long side. I know you guys are reading the articles. I'm sorry, I pulled up the wrong stock here. McDonald's is what I wanted to pull up. I know you guys are reading the articles. Now, this is something we talked about technically, reading the articles about the, how many eggs do they serve a day? It was something nuts. But they're going to free-range chickens. I don't talk a lot about fundamentals here, but since I'm a chicken freak, a hen freak, we got to talk about this. So, talked about McDonald's getting that weekly close below and then going back and, you know, not really cooperating with the latest kind of umphs of the market on the upside lately. And last week we just, you know, we talked about trying to short against this 118.86 area, and that finally worked out relatively well. So what's in store for this one? It looks like we are printing this morning 114.81, so trading a little bit lower. Here's a daily on McDonald's. I don't think this thing's done. Where's it headed? Let me just pull up the chart again. I think you probably have 112.5 in order on this, and then the trade's over for a while. But free range chickens now, or free range. Would you call them free range? I read an article. They were kind of beating their chest about giving a chicken now 12 inches by what is that, 144 square inches to lay an egg in instead of, I guess, a 9 by 9. Kudos. We'll be right back, guys.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. Showing you Fossil right now. I was pulling up the little custom sort, trying to find stocks in the S&Ps and the NASDAQ. They're meeting this downtrend resistance thing. So I'm looking at Fossil, but there's a couple different ways to look at this. I hate this company because I bought a watch online, and they had to send me the same watch 2 different times, because even though I was willing to pay the ungodly markup, you know, from being manufactured in China, and the metal that was complete crap, I still expected it to work. But as we come up into these weekly unfair lows like this, you know, you could say, okay, well, wow, this is kind of cool because this is a weak, really weak stock. and probably got a lot of headwinds long term. But, you know, it's crowding up into this. And a lot of times this particular action will kind of run some people out before it falls again. So just beware of situations like this. We're kind of making these higher lows and compressing up. But you do have a chance to play defense against this thing. You know, some of the best watches I bought have been at Walmart. And they're kind of disposable and they're kind of cool. DuPont. Let's take a look at this one. All right, so again, I think we'd probably stay away from that one. Let's take a look at Walt Disney. This is one kind of meeting the criteria. You know, if you're looking for a stock that looks like it's just flat out something wrong with it, I like this. I like how we're just hovering around these lows. You get any markets pullbacks, I think this one's probably stands a good chance to fall. You know, but again, put the stops in. And let's take a look at Clack. Man, was this a day trader's dream back in the day? And the reason I like this, you know, you got to look, obviously not the best news in the world week before last, but as we rallied up here after that sell-off up into some inflection points, DMZs, if you will, I really like this setup a lot. 71.18, kind of Custer's last stance on the DMZ there, stops above. I like how this is acted. I like how the market's really kind of come back to you on KLAC. And the scanner just kind of finds these relative to profiles. It's kind of nice. I look at a lot of these particular setups after the market at the end of the week just to see what's kind of sitting in the holster of some of these custom sorts. I'm going to go back to the dashboard here. I bought an iPhone in China one time. It's amazing the level of detail that they will go to produce a fake. And then it just falls apart. It'll work for 2 weeks. I mean, why go to the trouble? It's just crazy. All right, so another couple of sorts. Let's take a look at breakdowns. These were ones that were breaking down on Friday, or as of last week and Friday. Chipotle, we got to take a look at Ralph's competitor here. This little thing, man, Hachi mama, this thing could get flushed again. Keep your eye on this one. You got a chance to play defense here against 392.99. Let's call it 393 on Chipotle. I guess Jay's not listening. FCX, let's take a look at this one. Not a lot of leverage there, but if you're going to trade this from the short side, you got 1020 sitting down below. Guys, you've been great. Stay tuned for Larry. You won't regret it.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.